They're going to depreciate your roof. Your depreciation is not recoverable. Some of these insurance companies will send out email memos saying, we're not buying roofs this month. If you send them the 3 quotes, they're going to tell you to go with a cheaper contractor because it saves them money. Why is it so complicated? They're controlling the process more than ever. Is your roofer trying to take all of your insurance money, or is he trying to scam you, or is maybe the insurance company not doing right by you? Why is it so complicated? If you've asked any of those questions, you're not alone. After 20 years in the roofing industry, I've heard all of those questions, and today we're going to break down the insurance claims process and why it's so difficult to understand. This is not legal advice, so don't take it as such. So let's start with the basics. Let's say the insurance company is going to value your damages at $30,000, and that's total out the door, including your roof, your interior, maybe some siding, gutters, windows, whatever is damaged from this hail or the windstorm that came through. They're saying the total valuation of damages is $30,000, and they're going to refer to that as the replacement cost value. And that's essentially what it's going to take in today's market to replace all of the items that were damaged on your property. But you're not going to get that full $30,000 up front. Instead, they're going to send you a check that's greatly reduced. So step one is the depreciation. They're going to depreciate your roof and other items, just like a car loses value over time. The same thing applies to your roof. So they're going to depreciate this check, let's say, by about $10,000. That'd be around 30%, which is not unusual. Then you're left with $20,000, and that is what they call actual cash value. That is what the roof is currently worth in its current condition. Now, step two is your deductible. And let's say, because today's deductibles are really, really high, let's say it was $10,000. And so they take that $10,000 off of the $20,000 that remains after the depreciation. And now you get a check for $10,000 up front. That check comes in the mail or gets deposited into your bank account, and they expect you to use that as your down payment to get your property restored to pre-storm conditions. So let's go over the math again. You started with $30,000. First, they took out $10,000 for depreciation. Then they took out your deductible because, of course, that's your responsibility, and that's supposed to come from your bank account, not from the insurance company, right? So you're left over with $10,000, and that's your down payment to the contract. Now, what about that missing $10,000, the depreciation? Can you get it back? Well, that just depends on your policy. The depreciation is recoverable if your policy says it's recoverable. RCV policy is replacement cost value. ACV is actual cash value. So if you have an ACV policy, that's not good news, and your depreciation is not recoverable. If you have your claim paperwork handy, if your depreciation amount is in parenthesis in the insurance estimate, then it's likely that that depreciation is recoverable. However, if it's in angle brackets, like the less than and greater than sign, then it's likely that that depreciation is not recoverable, which means you have to pay that portion as well. Now, it used to be very simple. If you could prove that the work was done with a quick little picture, maybe a receipt or something like that, the insurance company would send the depreciation. But now insurance companies have gotten way tighter. And whereas they used to require one of 6 or 7 different things, now sometimes they'll require all 6 or 7, and they won't tell you up front. They'll just tell you one at a time to delay the process of that check coming in the mail. So a lot of times you may think that the roofing contractor is causing this giant delay. However, it's the insurance company who isn't being upfront about what it takes to release that depreciation. Some of the things I'm talking about are a certificate of completion that a roofing contractor might have you sign and then send to the insurance company, or maybe photos of completion, and sometimes they want completion photos of the roof only. Sometimes they want roof, gutters, siding. Sometimes they're going to want to see proof that you actually paid your deductible amount in full before they release the depreciation. But for right now, let's say the insurance company still has that $10,000 of depreciation. Let's say the roofing contractor is going to charge $20,000 and his scope is the same as the insurance company's scope. How is the contractor able to do it for $20,000 when the insurance company said it's going to cost $30,000? He could cut some serious corners. They may use some cheaper materials than what the insurance company is calling for. Let's say you had some premium ridge caps on your roof and the contractor might have missed it. So he's saying he can do this job for cheaper. Can't tell you how many times I've seen where a roofing contractor will go in there and take on the interior work as well. But instead of replacing the drywall and the insulation and putting a fan up there to reduce the moisture and make sure that mold doesn't grow, instead, they just cut out the sheetrock, put new sheetrock in, paint it, make it look pretty. Perhaps he's leaving the old underlayment there. He might be installing new underlayment, but he's leaving the old underlayment because it saves on labor costs when you're tearing the roof off. So you're looking at these two differences, and you have one for 20,000 and one for 30,000. So naturally, you're thinking, well, hey, if the roof only costs 20, but I'm getting 30, that means that I'm going to do okay. Maybe I'll make 10 grand. Or at a minimum, it's going to, cancel out my deductible. For a long time, people got away with it. And that unfortunately led to a culture of homeowners profiting from insurance claims. Over the years, laws have changed because insurance companies have caught up to the fact that people were profiting off of insurance claims, which is illegal, by the way. Are you going to actually save that $10,000, the discrepancy between the 20 and the 30? Short answer is no. Insurance companies are way too good at this to be handing $10,000 per claim out to homeowners. Insurance companies can now require tangible proof that you have actually paid your deductible in full to the contractor before they release your recoverable depreciation. So they're going to ask you, send me a screenshot of your bank account where you signed a check for $10,000 to this roofing company. They'll ask you, hey, send me the contract that you signed to get this roof done. Then they'll compare the contract to the price that they have. And what do you think is going to happen when they see that your contractor is only charging you $20,000 for the same items that they're trying to pay $30,000 for? So now it looks like this. The total claim value is $20,000 now, and the insurance company sent you $10,000, which you paid to the contractor. Then the contractor needs his balance of the $20,000 that he's charging, and that's your deductible. You pay $10,000 out of your pocket to the contractor, and that's $20,000. So why would you need the depreciation for $10,000? You still paid the exact same price, $10,000, which is your deductible, because that never changes no matter what the claim value is, but you just got a cheaper contractor. You trap yourself when you think you're saving money. This is also why insurance companies love telling you to get 3 quotes. They know that most people are going to pick the cheapest contractor, or if you send them the 3 quotes, they're going to tell you to go with the cheaper contractor because it saves them money. Now, homeowners sometimes think, well, this discrepancy means that somebody is scamming somebody somewhere. Maybe I deserve the $30,000, but he's charging 20, so I should be able to pocket that $10,000 difference. Well, the reality bears out that you cannot legally do that. So it's in your best interest to actually pick a contractor that's better, the top rated contractor in your area, the one that says we do the work for the insurance pricing. A lot of times that's confusing to homeowners because homeowners want the safety of knowing what their hard physical number is before they begin work with that roofing contractor. Remember, your deductible is your cost and that's it. My advice to you is just pick a reputable contractor. Don't go with your neighbor or your neighbor's friend or your cousin or your nephew unless they have a large online presence, documented case studies, testimonials from other customers. I mean, there's tons of ways to vet a contractor online today, and a lot of these good contractors are going to tell you that they're going to do the work for insurance company pricing. And keep this in mind with the advice that I'm giving you. If I'm telling you to go with the most expensive contractor, remember, it's not supposed to cost you any more than your deductible. The only way you can get charged more than your deductible is if you elect to have better materials than you currently have. It's not about the roofing labor or the roofing company, what kind of roofing company, who charges what. Your cost is fixed. It's just the deductible that's on your policy. The one controlling factor that you have is, what does the roofing contractor say in his contract? Does he promise that he'll complete the full insurance scope of work? If so, then you can go line by line on the insurance company's estimate, often referred to as a scope of work, and you can require that the contractor completes every single one of those and even shows proof of completing those items. They might say that they're going to do the full scope of insurance work, but you have 20 line items on your paperwork and they ended up only doing 18, but they still collected on the other 2 items. This is actually really common. It can be a very easy overlook, a mistake, an error, or it can be intentional. When I was talking about earlier, the HVAC rain caps, sometimes those are omitted by accident, or maybe it's something a little more serious, like there was a little interior work, like a closet, and you didn't even know it was approved, but the roofing contractor collected for it, just never got the work done. For years, the industry has started to change. Roofing companies and insurance companies both are navigating the modern world differently than they were 10, even 5 years ago. Insurance companies in particular are adapting very well. They're starting managed repair programs, often referred to as MRPs, partnering with contractors to reduce their costs so they can go straight directly to the contractor. They'll even tell the homeowner that the homeowner has to use their preferred contractor. They're buying data companies to understand how consumers like you behave. And just over the last few years, I've heard from many contractors who talk about how approvals are tightening. People are getting approvals less often and many more denials than we used to see. Part of this changing industry is the way the insurance companies renew your policy. A lot of times it can look like it's a simple renewal letter. You sign it, you send it back, and you think everything's hunky-dory. However, they changed the policy on you when you signed it. And maybe they kept it as a replacement cost value policy, but they inserted this little Trojan horse document that's called a roof payment schedule or a roof loss schedule. And what that does is it really just turns your replacement cost value policy into an actual cash value policy without telling you, without saying it out loud. The roof loss schedule is essentially a special addendum for the roof alone. And of course, that's the most expensive project for most homeowner claims. And so they put this little roof loss schedule on there that decreases the roof payout vastly, 50, 70, 90% on top of the depreciation that they're calling recoverable, right? So they still call it a replacement cost value policy, but they've embedded a ACV Trojan horse right into that. So you never know, because you see replacement cost value on your old one, you see replacement cost value on your new one, and your agent or your insurance company does not inform you that your policy is changing. So you got to read those papers carefully. Look, there's a book that was written regarding some of Allstate's policies and some other insurance companies and how they behave in the marketplace. And it's called From Good Hands to Boxing Gloves. And this is not an endorsement of the book, but it's worth a read. At least it's worth knowing that it's out there, right? This process is so well documented that there's a big book written about it. Some of these insurance companies will send out email memos saying, we're not buying roofs this month. Basic fraud like that is just completely irresponsible. Insurance companies have been forced to pay homeowners more, and even bad faith claims have been proven against insurance companies where the homeowner can receive damages well beyond the scope of the work. At the same time, contractors have been caught inflating claims. I've witnessed it firsthand, where people will even Photoshop extra workers into pictures and tell the insurance company that they had a certain amount of roofers when they didn't. Or perhaps they'll put in there for a safety watch when there was no safety watch. Or maybe they add in for some OSHA protections or some scaffolding and they never used it. Maybe they'll send generic pictures to prove it. All sorts of fraud exists on the insurance company side and the contractor side, but homeowners aren't unstained from fraud either. Every one of us thinks when we see a large amount of money, man, it sure would be nice to have some of that in the bank account. But the reality is the insurance company is not there to help you profit, to make money. The insurance company is there to restore your property to pre-storm conditions, very specifically. And you're not supposed to make money on the claim. If you do, just be aware that there are states, many states actually, that have laws specifically against profiting on an insurance claim. The truth is, insurance is designed to restore your property. It's a negotiation of scope of work and the price for that scope of work. It's not a giveaway center and it's not a profit center. Hey, did you know that 90% of the viewers on this channel don't subscribe? If you got value out of this, it helps me tremendously if you would hit that subscribe button for me. I look forward to seeing you on the next one.
Like and subscribe.